You don't need several lakhs to start trading. Even 50,000 rupees is enough to start trading only if you know what to avoid and where to begin. The stock market doesn't care about how much money you start with, it only cares about how you manage it. 50,000 rupees can teach you more about trading than 2 lakh rupees ever will. If you think 50,000 rupees is too small to start trading, you are thinking like a gambler and not a trader. Because remember, 50,000 rupees is less than what people lose trying to get rich quick in the stock market journey. But with the right mindset and system, it's more than enough to start your trading journey intelligently. If you had 50,000 rupees and no fear of losing it, would you gamble it, save it, or trade it with a plan? Most people choose wrong, but I will help you to choose right. Everybody talks about how to make money in the stock market, but no one tells you what to do and how to start with just 50,000 rupees. That's where I start with complete clarity and no noise. Friends, I will give you 50,000 rupees and I will ask you to build your body or transform your body. Would you try to become like an Arnold in 1 or 2 weeks or in 1 month? Definitely no, right? You need to learn the workout form, diet, and also the discipline to go to gym every day, right? Trading is also the same. The capital is your gym fee. The result will come only when you show up with the right mindset every day. Many people think strategy is 90% important and psychology is 10% important. Most traders flip this chart in their minds. They think market is about knowing secrets and strategies, but it's really about mastering yourself. So in real life in trading, strategy important is only 10% and the psychology importance is 90%. Now, 50,000 is not to test the market, 50,000 is to test your psychology. Now, trading with 50,000 rupees is like starting a fire with two matchsticks. You don't waste one stick trying to look cool, right? You light it when the wood is dry and you protect the flame. 50,000 rupees in trading is the same. Protect it or you will have no second chance. Now people think capital is power, but it actually reflects who you are. 50,000 won't turn you into a good trader. It will reveal whether you're already a good trader or not. If you are already a good trader, you will make more money even from 50,000 rupees. If you are already a bad trader, you will end up losing that 50,000 rupees as well. Now, there are three types of trading. Before you proceed, you should know there are three types of trading: intraday trading, swing trading, positional trading. Intraday trading is all about buying, no, taking the trade today and closing the trade today itself. Swing trading is all about taking the trade today and closing the trade maximum is 1 month. Okay, within 1 month, if you close the trade, that comes under swing trading. Positional trading is all about holding your trade up more than a month, maybe 2 months, 3 months, or even up to 1 year. Okay, that comes under positional trading. Now, if you are a beginner, if you have only 50,000 rupees capital, intraday trading, don't try. Okay, it is out of your zone. It demands more skills, expertise, and discipline about over your emotions. So don't try with intraday trading. So swing trading and positional trading is only the options you have. I would recommend swing trading because you will take the trade today and you will close the trade within a month, right? Because most people don't have the patience to hold the trade more than a month. So that's why I suggest swing trading. I hope this is very clear. Note down, there are three types of trading: intraday trading, swing trading, positional trading. I recommend swing trading if you are a beginner. Now, there are three trading instruments once again: equity, which requires less margin; futures demands more margin; options, it is very versatile trading instrument. It demands less. It can be done with less margin. It can be done with medium margin. It can be done with more margin as well. So, time being, until you learn the basic skills in trading, I recommend equity. Once you get some confidence in your trading, then only you can go with options. But until you learn the basic skills in trading and control your emotions, I recommend equity. Now, friends, do you know with 50,000 rupees, you can control assets worth more than 1.5 lakh rupees or 2 lakh rupees legally, ethically, and strategically using options. And no, I'm not talking about reckless options buying, okay? I'm talking about credit spreads, which I'm going to cover in the end, okay? Now, you're not gambling or you're not becoming like a casino, right? I mean, so I'll explain this concept at the end. See, if you even with this margin, you can make good ROI and you can control, the option selling part. I'm going to cover this part in the end, okay? Now, what you need to begin, if you're really a beginner, you need to know three things, okay? You should open a trading account in India. We have many good brokers like Zerodha, Fires, or Grow. But you should know there are two types of brokers, discount brokers and value brokers. So discount brokers usually offers 20 rupees per trade, okay? So always go with a broker which offers less execution cost, the less brokerage charges, okay? So these two things are very clear, and you should use trading view as a charting tool to study the charts. So if you're a beginner, if you don't know anything, remember these three things. Now, whenever you start, if you have 50,000 rupees, don't deploy all your 50,000 rupees capital in single trade because it increases the risk, right? Now, this is a simple example, okay? See, let's see the entry price in this breakout trade is around 3480 and stop loss is 3360. So if you buy 10 share rupees, you will end up deploying 34,800 rupees, right? So as I said earlier, you should not deploy, most of the capital or even 70-80% of the capital in one trade. So if your plan is to hold two trades, then you should use 50% of the capital per trade. So if your plan is to hold four trades, then you can use 25% of the capital per trade. So in this case, if you buy 8 shares, 10 shares is it will be 34,800 rupees, right? So if you buy 8 shares, approximately 27,000 rupees will be allocated. So you need to buy 4 shares or 5 shares, right? So in that case, it will be around 13,000 or 14,000 will be deployed per trade. So always remember the rule. So whatever the capital you have, don't deploy 100% of the capital for one trade. You can deploy maximum 25 to 30% of your capital per trade. This is a golden rule, basic rule. You have to obey it, you have to follow it, you should not forget it, okay? So this is very important. Now, there are two types of trading techniques. So trend following and trend reversal. So trend following is like, trend will be already established, there is an uptrend, taking in the direction of the trend, long trade, comes under trend following. So there is another trading technique which is also called as trend reversal or contra trading. So this comes under taking the trade against the direction of the trend to make more profit per trade. So in trend following, the safety is very high, the profit is small. Whereas in trend reversal, safety is less, but the profit is huge. So some experts they focus on trend reversal or contra trading, but I recommend trend following for beginners and intermediate level traders. So if you are a beginner or intermediate level trader, always go and follow with trend following, and don't ever plan for trend reversal. Okay. Now, once again, in trend following, there are two types of trading style. So, one is pullback trading, another one is breakout trading. I will explain both these two things, then I'll explain which one to pick for your trading style with a proper reason. Now, this is pullback trading. Okay. So, in pullback trading, what happens is the trend is already established. In this case, the trend is a clear uptrend, right? See, it is very clear, it is an uptrend. Now, taking trade whenever the price gives a small pullback. Okay, so if you take a long trade here, the trend is upside, right? If you take a long trade here, we are taking in the direction of the trend, right? So this is called as pullback trading. Some people use Fibonacci series, some people use like RSI hidden divergence to manage this kind of pullback trading. Okay. Now, breakout trading. For example, price is in either upside or in sideways trend, and there will be a resistance level. Let's say this is 1000 rupees, which is acting as a resistance whenever the price comes to this level. Now, once the price breaks above this level, so there is a high possibility of price breaking above this. I mean, going upside very quickly because the price broke this point of time, right? This is called as breakout trading. So I recommend breakout trading if you are a beginner because uh, let me frank friends, most of us we aim to make quick money. We make more money in quick time, right? So compared to pullback trading, breakout trading provides an opportunity to make more money in quick time. So I suggest breakout trading for beginners. Now I'm going to explain how to manage this breakout trading in a proper way with proper entry rules, stop loss rules, and exit rules in all the market conditions. Now, the question is why breakout trading? So, as I said earlier, breakout trading offers a wonderful opportunity to make more money in quick time. Now, why the identification of breakout is very important. Many people struggle to differentiate whether it is a genuine breakout or a false breakout. So, you should know two things, friends: smart money and dumb money. So, the breakout trade opportunities which are created by smart money is offers a high probability of making more profits, whereas the breakout trade opportunities created by the dumb money will not offer a good opportunities to make more money. So you should have a proper clarity how to differentiate a breakout from a false breakout. Now, see, this is very simple. There is a proper resistance trend line, right? There is a proper resistance trend line. Whenever the price came to this level, it acted as a resistance, right? Now see, look at this candle, look at the volume. Look at this candle, this is a buying candle, okay? It is a buying wick. Look at the buying, volume on that particular candle. See here, this is a bullish engulfing. This level acted as a support actually. And see, whenever the price broke above the trend line, look at the volume. So, do you think this is a smart money or dumb money? Okay, this is a smart money's plan, right? And you can see what happened after that. Okay, so my point is to look out for opportunities or breakout opportunities which are created by the smart money. Now see here, whenever the price came to this level, see here, big selling volume. See here, big selling volume, big selling volume, right? See, so this is a very clear rejection, right? So smart money is selling actually. Okay. So this is for a short trade, but I recommend only long trade at this point of time, because at this point of time in Indian market, you can't carry short trades in equities. That is why I recommend in equity. But once you master it, you can also take short trades using options that comes under some experience, but you should know, you should get a clarity and price action first. Okay, now see here, this is a proper resistance trend line, right? Now whenever the price came in, it acted as a resistance. Now if you observe price action or the major volume spike, see what happened. Big volume spike, buying volume spike, price went upside. Volume spike, went upside. Big volume spike, big price went upside. Big volume spikes, price went upside with the gaps. Now price displayed a break out of the resistance trend line with a big volume. So this is smart money's plan, right? So there is a high possibility of price going on the upside because this is a breakout opportunity created by the smart money and not by the dumb money. Okay, see, you can see the result, right? If you have taken a trade here, you can see what would have happened, right? See, identifying these kind of breakout trade opportunities demands three types of knowledge, friends. So, drawing proper trend line, identification of real breakout, and the trade execution. I'm going to explain one by one in detail. Now drawing a trend line. So this is very basic and very simple, friends. So you should always pick the stocks which provides a proper price action, smooth price action, and you should always avoid all the stocks which doesn't offer smooth price action. So when I say smooth price action, you can see this is not a smooth price action. Lot of selling wicks, lot of buying wicks. Okay, whenever the stocks comes with lot of wicks on upside, downside, this is not a smooth price action. There is a high possibility of price triggering your stop loss or triggering your entry price opportunity unnecessarily. So one more example is this: whenever the price displays too many gaps, okay, this is also not good. See here, this is an symbol of operator stock. So whenever you see, dots like this, or more gaps, or buying wicks, or selling wicks, more buying wicks, more selling wicks, always avoid those kind of stocks. Okay. So now trend line. So most of you know what is a trend line, right? Trend line is a straight line drawn, horizontally or little with angle, by connecting more price peaks which can be used to identify support or resistance level, also to manage your entry and exit. Okay, now you should remember three things while drawing a trend line. So price peaks, the slope of the trend line, and the price should respect the trend line, friends. Now see here, price peaks. So when you draw a trend line, ensure you are connecting the price peaks. Okay, in this case I have connected three peaks, right? Very simple concept. Now in this case I have drawn a trend line, I have connected four peaks, right? See, whenever you connect more number of peaks, that becomes a powerful trend line. Listen to me very carefully. Whenever you draw a trend line which connects more number of peaks, that becomes a powerful trend line. And the break of that trend line will give very, very good move on the upside. I'll repeat once again, friends. Please, please, please remember, please listen to me very carefully because this is very, very important. Whenever you draw a trend line by connecting more number of peaks, that becomes a very powerful trend line, and the break of that trend line will give very good move on the upside. So our focus should always to identify such breakout trade opportunities, and always avoid the trend lines with high slope, because that is not a healthy sign of a trend. Sleep trend or trend line like this, always avoid those kind of things. See, and the next important thing is price should respect the trend line. In this case, see, price exactly came back from here. Price exactly came back from here, right? So price should always respect the trend line. See, in this case, the price has not respected the trend line, right? It went upside and it came downside. So if possible, if there are two opportunities, if there is an opportunity, pick this kind of trade instead of picking this, because price has not respected the trend line. It decreases the importance of the trend line. Okay, now we'll go further. See, these are some of the examples I have drawn. Okay, so this is a proper trend line. It connects 5 6 peaks. Price has respected the trend line. Price action smooth, and price displayed with a, price showing a breakout now. Okay, now this is another trend line example. See here, this is another trend line example, right? So this is a trend line summary. You can go, you can check this. I don't want to repeat everything. You should, whatever I explained, it covers all these things. Now, how to define a genuine, or how to differentiate a genuine breakout and a false breakout, friends? That's most important. Okay. So see now, if you look at this, you might think this is a breakout, right? Because there is a proper resistance trend line and price has broke the trend line and it closed on the upside. But the result is it went downside, right? So identifying or differentiating a breakout from a false breakout is very, very important. See, this is also right. This looks like a breakout, proper breakout, right? See, price went downside. See here, breakout or false breakout. You might think it is a false breakout or a breakout, whatever it may be, and you can see it went downside, right? See, to differentiate a real breakout from a false breakout, you should have a clarity on four parameter: a big breakout candle, a quick time, absence of opposite party response, and a good volume. I will cover everything one by one. A big breakout candle. So now you already know a valid trend line, right? See here, this is a big breakout candle. That's very, very important. Okay, breakout candle should be big, not very, very small. See the big breakout candle. Okay, this is the first parameter. Quick time, when I say quick time, after the breakout, price should not, you know, or I would say the breakout should not happen with the small candles, because whenever smart money involves in the game, their participation always results in a big candle, not the small candles, chota mota candles. No, the big candles. Okay, so it should move in one quick time. The if there is a resistance line, the break of resistance line should happen with a big candle, not like this with small candles. It's not very, very important. See here, small candles breakout, right? No, this is not at all important. And the absence of selling wick. This is the third parameter. See, in the breakout candle, once the price breaks above the resistance trend line, there should not be selling wick. Okay, I'll repeat once again. Once the price breaks above the resistance trend line, there should not be any selling wick, because selling wick indicates the absence of the selling at that point of time. Also indicates uh, the strength of the buyers, right? That's very, very important. Okay, see here, this is a presence of small selling wick. So the presence of small selling wick is okay, but if there is a huge selling wick, it's not at all a good idea. Okay, now people ask how much selling week is acceptable. Generally, the 20% selling week is acceptable. For example, if this is a breakout candle, the breakout candle low is 100, breakout candle high is 110. If it closes above 108, then this constitutes 20% selling week, right? Less than 20% selling week. So just follow thumb rule, okay? You don't have to calculate 20% formula and all. Just go with a naked eye. So if it is a small selling week, that is acceptable. If the selling week is huge, that's not at all acceptable. Okay. Now good volume, very simple concept. If the breakout happens with a good volume, then it can be considered as a good breakout. There is a high possibility of good breakout. Okay. See, this is also a breakout with small selling wick with good volume, right? So this is one more example. Now I'll connect all the three things. Okay. So this is a valid resistance trend line, right? This is a valid resistance trend line. So look at the breakout candle. It is a big breakout candle comparatively to all these candles, right? So it satisfies the first parameter, big breakout candle. Second, it happened in a quick time, right? It didn't break the resistance trend line with a small candle. It broke with a big breakout candle, right? Third is absence of selling. If you look at the you know the breakout candle very clearly, the selling wick is very less, right? So that third parameter also it satisfies. Fourth parameter is buying wick. So buying wick is very huge, right? So this is an ideal breakout. Okay, so this is an ideal breakout. So one more ideal breakout. This comes in JSW steel. Big candle, breakout of resistance trend line. Yes, quick time. Yes, options are selling wick. Yes, selling wick is very negligible. Options of selling wick is yes. Good volume. Yes. See, this satisfies all the four parameters. Hence, this comes under very good breakout scenario. So this is one more scenario. It comes in Sonata software. This is a valid resistance trend line. Big candle, yes. Quick time, yes. Absence of selling wick, yes. Big volume, yes. Once again, it satisfies all the four parameters, right? Summary: it is essential to filter the real breakouts to get success. The first quality of real breakout is that breakout should happen with a big candle. The second quality is breakout should come in quick time. Okay, so on the daily chart, it should display breakout criteria in one day. The third quality is the absence of opposite party response, which is nothing but the absence of selling wick on the breakout candle in our system. Okay, so the fourth quality is the breakout candle should receive a reasonable, at least good volume. Now, plan your trade and you have to trade your plan, right? A good trading system should define entry, stop loss, and exit levels very clearly. Okay. See, in this case, see, this is a peak, high, right? So, whenever the price breaks above this, your entry come above the high of the breakout candle, and your stop loss should be below the low of the breakout candle. Now in this case, this will become your target, and you should look for minimum of 1:2 risk reward trade. Okay, this is your target. So in this case, see in this case, when the price is in a downtrend, you can, this short downtrend you can target the peak. But if the price is in a sideways trend, okay, and if it is breaking all time high, so what you can do is you can target the width. Once again, the entry comes above the high of the breakout candle, stop loss should be below the low of the breakout candle. You can target the entire width on the upside. Okay, so this is whenever the price is in a sideways trend and it is breaking out. Now this is another simple scenario. Once again, if it is no sideways trend and if the price is trade breaking above all time high, in that case you can go for either 1:2 risk reward, or you can trial your stop loss below the low of every swing low. Okay, so these are the three simple. Entry SL is anyway fixed. Entry is above the high of the breakout candle. Stop loss is below the low of the breakout candle. That is fixed. Exit, you can follow these three different exit techniques based on the different market conditions. Okay. Friends, these are some of the example. So this is TCS daily charts. See here, this is a clear-cut resistance trend line, right? And if you observe the breakout candle, it is a big candle, right? And the selling wick is also very negligible, right? And you can see price rallied after that, right? So if you have taken a trade here, long trade above the high of the breakout candle, keeping a stop loss below the low of the breakout candle, so it's easily close to 1:2 or 1:3 risk reward trade, right? Similarly, this is another example from HDFC Bank chart. You can see this is a clear-cut resistance triangle, right? It connected around close to 5-6 peaks. See the look at the breakout candle. The breakout candle is big compared to these candles, right? And also it's a clear-cut breakout, right? So I've not added the volume here. Usually I don't check volume because I get information from price itself. But you can also compare volume. Volume will be very good in these breakout candles. See, once again, the price rallied upside. Similarly, this is another example from Titan. So again, it is a powerful trend line. I connected around five, six peaks here. And if you look at the breakout candle, right, it is a very big breakout candle with less selling wick, right? And you can see price rallied after that. And this is another example from Kotak Mahindra. Once again, this is a, powerful trend line, and price displayed a big breakout candle with a small selling wick, right? And after that, price rallied upside. This is one more example, JSW Steel. Once again, I would not say very powerful trend line. It is a pretty decent trend line. Price displayed a breakout candle here. The selling wick is almost negligible. It's very, very less compared to the entire body of the candle. And you can see price quickly rallied after that. So these are some of the simple example, friends. So what you can do is you can go to trading view, you can apply volume, and you can analyze. First, try to draw trend lines as much as possible. And apart from that, try to locate the powerful trend lines. Suppose if you draw 100 trend lines, so there will be only 20 to 30 powerful trend lines will be there. So try to identify that, try to extract those powerful trend lines. And then if there is a breakout, try to study the breakout, how it happened. This is how I learned all these things. So whenever you will be able to, identify or locate these powerful breakouts, so you will be in a pretty good situation, or you will get very good confidence to take the trades, going forward. Now, see, I don't say, these kind of breakout trades always results in profit. Sometimes we do face losses as well. See here, this is a quite, I would not say very powerful trend line, but a decent trend line. Price displayed a breakout candle. There is a slight selling wick here. Usually we don't take it, but even if you assume if you have taken it, it didn't rally much, right? It came back immediately after going for 5 6 days. It came back immediately. So in this kind of situation, what you can do is, whenever price breaks, whenever you take a trade, if there is a, the immediate selling candle, suppose in this case this red color candle is the immediate selling candle, right? So whenever you get a that red color selling candle, or the selling candle or red color candle, you can trial your stop loss. So originally this will be your stop loss, right? So you can trial your stop loss below the low of that particular candle. So in this way, what happens is, either your trade in worst scenario will turn as a break even trade, or a very small profitable trade. So in this way, it is fine. Even if you don't lose money in any trade, it is fine. And but if the price rallies upside, you will make profits. But let's say you didn't trial your stop loss below the low of this candle. Assume you're holding it here. So after showing some profits, price came back and hit your stop loss, right? That's why trialing stop loss is also very, very important, friends. So only two things decides the fate of your career. So it's only entry and exit, okay? Because entry and exit are the only two things which decides the fate of your trade, irrespective of your educational qualification, reputation in the market, or total experience in the market, right? So this follow this trial stop loss technique. So one more thing is, this is one more simple example. In this case also it failed, right? See here, it is a decent trend line. This is a breakout candle with small selling wick, but price rallied upside. Once again, it came back and hit your stop loss, right? If you're holding, I mean, I don't think it hit the stop loss, but still, we'll assume it hits the stop loss. So it's always better whenever you see a selling candle. See, this is also a selling candle. Second candle itself, it appear like a green candle, but it is a selling candle because the selling wick is very, very huge. At least the third candle, this is called as gravestone doji. So after seeing this, gravestone doji, so you should trial your stop loss from here to here, below the low of the gravestone doji. So you would have, made a break even trade. I don't say it is a profitable trade, because your entry will comes above the eye of this candle, right? So you would have, made a break even trade. So whenever you don't lose money, that's it's like, saving money, right? Because let's say you lost 5,000 rupees. So if you don't lose 5,000 rupees, it is like a earning 5,000 rupees, right? So always focus on, I mean, making profits is very, very important. At the same time, not losing money should also be your priority, friends. Okay. So that's all about breakout trading system. So as I said earlier, I will also explain the credit spread strategy. Okay, see friends, only experienced people should use this credit spread strategy. If you are a beginner or if you are an intermediate level trader, I would suggest to stay away from the credit spread strategy and all. Now let's say I go to Nifty. So this level acted as a resistance, right? I will draw a trend line because I wanted to explain both the option selling and the credit spread. Now, the time of recording today is 31st March. I will also show the calendar. So today is 31st March. I'm recording on this day. So the expiry will be on Thursday actually. Okay. So just 3 more days are remaining. So now I'm assume the price will not trade above this level because this level also the previous swing high and recently it acted as a resistance. So I'm anticipating in the next 3 days price will not close or trade above this level. So that's why I'm planning to sell this 23,864 or the nearest is 23,850 or 23,900. Okay, so I'm planning to sell this. So what I do is, if you look at the payout graph, you can visit Abstra or you can visit the Sensible, etc., etc. There are many things. For example, I log into Obstra. So what I do is, so I'm anticipating price will not go above this level. So 23,864. So I'm planning to sell 23,900 call option or 23,850 call option based on the premium. Okay. So now I'll go here. Nifty, I'll go to options. I'll pick the recent expiry 3rd April. My level is 23,900. I'll check first. It has a decent premium. Okay, so you can see here if I have to sell it, it looks like there is some problem. So to sell it, for example, observe this very carefully. I need close to 1,76,000 rupees capital. Okay, so I can make 0.86 ROI. Always don't look at this number, friends, because whenever you look at this number, you you may be demotivated a lot. Always look at ROI. So a ROI of 0.86 rupees, 0.86% in 3 days is a very good ROI actually. Okay, so always look at, and success probability is 86%. So what it says is 86% success probability, 86% success probability. So ROI is 0.86% is ROI and capital needed is 1.77 lakh. Okay. So that's why many people don't do option selling. They don't do option selling because for them they don't have this kind of margin. Okay, so that is the reason people don't do option selling. But with a simple credit spread strategy we can bring down this margin requirement. We can also increase the ROI but without compromising with the probability of the profit. Okay, so I will show how we can do it. So now we have sold 23,900 CE, right? If I buy 24,000 CE or if I buy 24,100 call option, this will come down. Why? Because see, the brokers are asking this margin because see, if the price if the price goes above this level, it can go up to any level, right? It can go up to 25,000, it can go up to 26,000, 28,000. There is no upper limit, right? But if the price goes like that, the call option selling brings more losses, right? So that's why they come up with some margin requirement. But whenever you buy, for example, 24,000 call option, 24,100 call option, any price movement above 24,100 or 24,000, it will be taken care because we have bought that call option, right? The premium will keep on increasing. That will take care of the any upside losses. So that's why the margin requirement brings down drastically. So we'll make use of that. It's not a loophole. I would say it is a strategy. We can make use of the strategy. For example, what I do is I will go here. I will also add, for example, 2400 call option. Okay. If I buy, you can see immediately the margin requirement came down, right? Earlier it was 1.77 lakh, right? Earlier it was 1.77 lakh. And if you see here, 49,000 close to. So even if you have 50,000 rupees, you can take these kind of trades, okay? And if you look at ROI, earlier it was 86%, right? Now it is close to 85.5. There is not much difference. And the success probability is almost same. But if you look at ROI, this is very, very important. If you look at ROI, earlier it was 0.86% because we used 1.77 lakh. But if you look at ROI now, it is 1.67%. It's almost double, right? So it is close to how much? It reduced the margin requirement, with just 25% or 26% or maybe 27%, you can take the same position. ROI also increases because of the reduced margin requirement and without compromising with the success probability. Same success, 86%, here also 86%. Don't worry about 0.5%. But margin requirement comes down very, very drastically and ROI increases a lot, right? So this is how one can make use of the credit spread strategy even if they have 50,000 rupees capital. Okay. Now you should remember, friends, whenever if the price trades above that level, for example, if the price, I will clear this. I hope you got this point. So you need to remember one thing, friends. But if the price starts trading above this level, 23,900, so your call option premium, the sold leg is 23,900, right? It start increasing drastically because of the Greeks effect, okay? The delta effect, gamma effect, it starts going up like anything. So you should always have an exit plan. Let's say you have sold 23,900 call option at 20 rupees. So you should have a stop loss at 40 rupees or 50 rupees, okay? So in that way, you can continue to do it. Suppose if you lose money, so only 15% of the time you lose this much money, 40 to 50 rupees. But 85%, if you remember, this is 86%. If you remember, this is the success probability, right? So 85% of the time you end up making 20 rupees. Okay. So if you calculate, if you make 20 rupees, 20 rupees, 20 rupees, 85 times, 100 times, and if you lose 40 rupees or 50 rupees 15 times, at the end of the day, uh, end up making profit, right? So that's how even you can take the advantage of uh, you know the trade part, even if you are a beginner. I mean, even if you have 50,000 rupees capital. So but my suggestion is, friends, so don't start this credit spread strategy or option selling at the beginning itself. So I would suggest to trade breakout trading for few months, so you will get a grip. You will get a grip on the price action. You will get a grip on your mindset, how to control the emotions. So once you get that grip, then only you can start experimenting with credit spread strategy with little risk, with a proper stop loss. Okay, with proper stop loss. Anyway, we have the edge. When you take a credit spread strategy, it always comes with an edge which reduces the gap up or gap down risk. But the exit part, you should be very, very clear. You should have a very, very complete clarity to follow it. So I think that's all as of now, friends. So, do you want me to cover any other important topics, or if you're facing any difficulties in trading, you can let me know. I will make a detailed video like this on this particular topic. I think that's all, friends. We'll see you in another video with another useful content. Until then, thank you. See you. Bye bye.